Welcome back to part 3 of the Hogan Lovells GDF Digital Assets Summit. Hope you're enjoying the day. Lots more to come.
For the benefit of the audience, I'm joined here today by Sonia Chawla, Head of Legal for Investment Transactions at Schroders.
Yeah.
Thank you for joining me, Sonia.
Thank you for having me.
That's a pleasure. So why don't we start by you telling me a bit about yourself and your role?
So I head up the global investment transactions team at Schroders, which means any trading done by Schroders in any products in any jurisdiction is covered by my team.
Excellent. And what do you see as the opportunities for the financial industry when it comes to adopting digital assets?
There are so many efficiencies that can be made. Operational efficiency is probably the biggest one. One of the things that we're looking at currently is to use money market funds to assist with liquidity. You know, as we all saw the pain of the gilt crisis, we were scrabbling around trying to ensure that the money market funds were be able to use for liquidity purposes, and there was like a T1, T2 delay on those. And if we can use DLT platforms, blockchains to support money market funds, we think that will go down to T0. Now, that would not only assist with speeding up operational efficiencies, but it would also assist with the cost efficiencies for our underlying clients. That's the biggest thing that we can see right now.
So speed, efficiency and cost are the key benefits. By contrast, what do you think are the challenges that still need to be addressed to enable this to really happen?
I think there are a few challenges. There are certainly issues around the brokers are still building out their platforms. They are still, many of them are still in proof of concept. We are having a lot of conversations with them, and we are testing a lot of platforms, and we are still having hindrances. One of the platforms we tested, particularly for the money market fund, was there was an issue with the fact that the underlying fund had repos, and there was an issue with the regulators on the other side, with the US regulators, and this was a US institution, so that had to be shelved. So that's the biggest challenge we're having at the moment, is the coordination of various regulators globally. Cross-border issues are a huge impediment, as well as the cost. You know, these banks are building out these platforms, and they're side of the desk at the moment, as well as, you know, the buy side as well. We are testing all of these platforms, and they take a huge amount of time and resource.
Yeah, I think that's a consistent message we're getting from across a number of different people. You know, the regulators, different approaches, uncertainty it adds to sort of cost and time and uncertainty. But then these are things that can all be fixed.
Yeah, so we're working with the Monetary Authority of Singapore and part of Project Guardian, which I'm sure you're familiar with. And there are now a number of regulators have joined that particular project. And we're spearheading and chairing the Asset Management Association task force. And the reason that's important, that particular task force is important, is we are working across the globe with regulators, including the FCA, to assist with cross-border issues. And I think the regulators really need to be aligned on these issues. We can't have these silos. The US can't be these outliers of not really wanting to come to the table to have these conversations, whereas Europe, certainly APAC, Dubai, are spearheading some of these conversations, and, you know, putting in place these regulations and talking to the players in the market to find out what are the hindrances and how can we overcome them.
I think that's a good message to end on, really. I think the regulators need to look at this podcast, the other messages that we've been talking about. Thank you very much for coming in and talking to us today, and thank you very much for supporting our Digital Assets Summit. Thank you, Sonia.
Thank you, Michael.
I'm delighted to have Stefano here from R3. Stefano, do you want to introduce yourself and tell us what you do?
Hi, yes, great to meet you. My name's Stefano. I'm head of product at R3. Previously coming from more of a traditional financial background, I spent a few years at Market Access building out their fixed income trading platforms, and then more recently in multi-asset EMS at FlexTrade, before moving into the exciting world of digital finance at R3.
Brilliant. Okay. Well, it's great to have you here, and thank you very much for taking part in our podcast and, more importantly, our Digital Asset Summit later today. So, Stefano, what do you see as the kind of key opportunities in digital assets right now?
Yeah, I think there's lots of opportunities for digital assets right now in financial markets. Data management capabilities, post-trade processing, reduced counterparty risk, enhanced collateral management. But perhaps the most important one at the moment for DLT is the huge cost reduction for financial firms.
Yeah.
Taking settlement as an example, DTCC recently announced that just with a global failure rate of just 2% of trades results in costs and losses of up to $3 billion, which is quite significant.
Yeah.
So DLT, enables that atomic settlement, 24 hours a day, 7 days a week. Not saying that we're there yet, and that's the kind of the golden bullet, but that's definitely the capability. And more recently, as in June this year, Finality and HQLAX completed the first end-to-end test trade of an intraday repo. Not only did that show atomic settlement, but it also showed interoperability between an Ethereum-based network of the cash on Finality, but also with HQLAX, which is a Corda-based system as well. So, we're making strides in the right direction, but definitely around the cost reduction is a big one. Also, a lesser explored application of DLT is around the fulfilling regulatory and compliance obligations. The financial industry recently estimated a spend of around $180 billion per year on financial crime compliance and regulation. With 66% of payments executives saying that this is a real kind of issue that they want to challenge, they want to tackle. By improving the data and transparency of that data on a DLT ledger, it can really improve the reporting and oversight of what's going on in the markets, for sure.
Brilliant. Okay, and what do you see as the flip side then, Stefano? What do you see as the kind of key challenges then for this adoption?
Yeah, I'd say there are really two things. There's industry adoption, there's regulation, and there's also interoperability. If we start with industry adoption, as with any technological advancement, these things take time. Migrating systems in some of the largest financial institutions are, career-defining moments for some people. And taking that leap is definitely something that we're seeing in some of the FMIs right now. But it's not an all or nothing, right? It's a phased approach. It's starting small or starting in certain areas, realizing those benefits, but more importantly, showing those benefits to their clients, and not necessarily starting the conversation with DLT, but starting with the real benefits and cost saving that's delivering their customers. If we think about regulation a little bit as well, regulation also goes hand in hand with adoption.
Yeah.
I think financial institutions really require that regulatory clarity on what they're doing before they embark on these digital transformations. We're seeing at the moment, there are frameworks such as the UK Digital Security Sandbox, which is an opportunity for regulators and industry participants to explore how those securities, how existing securities are traded and settled, and how that might apply in a digital world.
Yeah.
But also something that R3 has been heavily involved in is around the Project Harmonia, which is a Hyperledger Lab initiative. Yeah. And that's really about setting the standards for interoperability and the standards for atomic settlement, and working with regulators, working with other technology providers and financial institutions to really drive that piece forward as part of the regulation piece. I'd also say that interoperability is another really important topic. There's a common misconception that industry participants need to choose either a public permissionless network or a so-called private permissioned network. And some firms really feel the safest way is to wait and see which technology prevails. From an R3 perspective, which was perceived as a private network, right? And really that, historically there's been that perception that there's a barrier there. We're really working on being interoperable and getting that message out there that actually it doesn't really matter which technology you choose. It's making sure you choose the right technology for the right use case in the right application.
Definitely. And understanding the risk of using that technology and whether it's the right one, depending on what your data is and the use case and all of those things.
Absolutely. And, and across the globe as well, as regulations emerge, they will play into the different technologies. But I do think, having a fully interoperable system it really doesn't matter then which whatever the firm is more comfortable in choosing, they can choose, knowing with comfort that if their assets are on a private network, or a better example would be if their cash is on a private network, then the assets can be on a public network, and that's completely fine. There's interoperability there, there's atomic settlement there, and the ecosystem works as a whole to move this forward.
Thank you very much, Stefano. Really appreciate you coming on and sharing your insights with me. Very interesting.
Thank you very much.
Thank you so much, Max, for joining us. So, Max, could you tell us a little bit about yourself and your role?
Thank you for having me. My name is Max Boonen. I run a small startup called PVO1. What we do is we put bonds on the blockchain. We take government bonds, we transform them into tokens that are transferable on public blockchains. Prior to that, I created a company called B2C2 that's become now the biggest dealer in the crypto market. So I've been in the space for about 11 years now.
That's great. And obviously you were an adopter, you were on that digital asset side, and you've clearly been in the space for a long time. So can you tell us about the opportunities for the financial industry as a whole when it comes to adopting digital assets?
Yeah, I've never been on the blockchain but not Bitcoin bandwagon. I never thought that blockchain was going to be very useful for financial services. At the same time, I wasn't a very big believer in Bitcoin. I come from a more traditional background. I'm a bit of a square, and I used to be an interest rate trader at Goldman Sachs. And so I left my job because I thought there was something to do in the Bitcoin market, but I didn't think it was going to be so big as it is now. And so I think the opportunities actually sit somewhat outside of traditional finance. I think there's lots to do when it comes to crypto and digital assets with freedom, the ability to do what you want with your assets without having to rely on intermediaries, but also in some contexts outside of the government. I think that can be transformative. I warmed up to that idea because I didn't think so before, but I think 11 years on, and Bitcoin must be, 15 years old now, I'm forced to admit that the Bitcoin market has grown much bigger than I anticipated, and at the same time, the application of blockchain technology in traditional finance hasn't really taken off. However, there is now a thriving ecosystem, often called decentralized finance, which has made use of those technologies in ways that are oftentimes quite positive.
I agree. And it's interesting to think about maybe that division. Ultimately, does DeFi become the main financial services, provider space? I mean, not obviously not a singular thing. And is there a way that traditional financial institutions ultimately are, pushed to adopt that? What kind of creates? Is there a bridge eventually, or does it just diverge further apart?
Well, the good thing is that you're a lawyer, and a good one at that. And there will always be work for lawyers in whatever form the future will take. I think, actually, that lawyers have been quite important in this whole journey because we rely quite a bit on contracts. Whereas a lot of financial markets rely on public law. How we've innovated in crypto has often relied on contract. And we found that regulation has been more of an impediment, oftentimes, to the development of the crypto market, because we have a technology that doesn't really require regulation, but we're trying to fit in a framework that predates the emergence of digital assets. At the same time, especially in common law countries, the law gives you a lot of flexibility in terms of what you can do. And I think that some of the most positive outcomes on the legal and regulatory front have actually been through the courts. There were several lawsuits that made precedent regarding whether it's Bitcoin property and things like that. And so I find that we've relied a lot more on that rather than on the benevolence and the guidance of regulators for the development of our market. So I think that's going to remain the case for a long, long time. And even when regulation is seen as being a little bit more positive, such as MiCA in Europe, I think Europe is seen strangely now at the forefront of financial innovation when it comes to this. I find it a bit surprising that Europe would be at the forefront of anything technology-wise. But we'll find, I think, that as good as the regulation can be, the cutting edge of innovation is probably still going to happen outside of regulatory pathways.
Yeah, I think we've seen that too, that, you know, you can frame these regulations, but actually a lot of the activity just continues to go on outside of it. Like, it's not even necessary. You know, there's a lot of enthusiasm, for example, around sandboxes and around projects, you know, being developed inside sandboxes. But at the same time, you know, projects like yours, for example, have been done completely outside of that context, and think there's a definite understanding that large projects can still, you know, will still continue and will grow outside of that regulatory environment and the sandbox environment.
Yes, we just went and got a box standard broker-dealer license.
Yeah. So kind of additional special regulation ultimately was unnecessary. It's really interesting dynamics, I think. So would you say, obviously you've talked about kind of, you know, regulatory constraints, as in if you try to operate within the regulatory sphere, some of the older approaches maybe end up constraining some of the innovative potential of the new technologies. Is there anything else that you'd identify as a key sort of challenge to maybe, you know, broader adoption? You know, what's a key challenge to growing your customer base, for example?
Adoption broadly defined. I think one of the difficulties is that it's not so easy to interact with the technology. If you're a millennial, it's not so difficult. You create a MetaMask wallet and things like that. You buy a little hardware wallet. But if you're outside of those tech-savvy generations, I think it's a little bit more difficult. We're getting there. The problem is really that of identity and credentials, you know, because your identity on the blockchain is your private key. If it gets stolen, it's a big problem. If you lose it, it's also a big problem. Recovery mechanisms and things like that, by definition, are a trade-off. Either it's very secure and it can't be recovered, or it's not so secure if it can be recovered in case of emergency. So that's tricky. That's now broadly defined. Yeah. When it comes to financial institutions, there's regulation, of course, that's slowing things down. But I think also cultural inertia.
That's something that we've heard as well, that idea that mindset shift is actually a real key here. You know, we can talk about the technology and we can talk about regulators and we can talk about maybe budgets. It would be another thing as well that people regularly bring up, but actually at the heart of a lot of barriers is the need for a real mindset shift. And perhaps in a company like yours, you know, when you're a startup and you're digitally native, essentially, company, you're not coming at it from the perspective of having the historical, you know, cultural restrictions around innovation. I always think it's a really interesting factor for people who are in innovation hubs or the innovation section of a large institution. So they're in the innovation job, but they're inside.
If you're a startup, and you know you do well. If you blow up, you blow up. No one really cares. You're able to take a lot more risks when you're in that configuration.
Yeah, really fascinating dynamics. Max, thank you so much for joining us here and for taking the time to do the podcast and for all of your great contributions. It's great to spend the time with you.
Thank you very much, everyone, for listening today. We've had, I think, a really successful Digital Asset Summit at Hogan Lovells with our partners, GDF, as always. I think it's been a really successful day. I think we've talked a lot about institutional adoption and the path forward, the opportunities and the risks. And what struck me most of all is that, you know, I think there is real appetite to move from the proof of concepts that, frankly, we're all a bit bored with into, you know, all of this just being business as usual. I mean, Lawrence, what are your observations from today?
Well, I think that's exactly where we are in the institutional ecosystem, John. And last year, the big mantra going into 2024 was from POC to production.
Yep.
Particularly, we're looking at everything from fixed income repos and some of the, you know, vanilla money market fund ETFs. But I think in a world where innovation theater is on its knees thanks to inflation, free money is not around, and the proliferation and diversity of technology and innovation, which is great, the use cases are emerging and we're getting a convergence. We're getting a convergence of platform or protocols. We're getting a convergence around which products are important to either consumers or institutional investors. And we're getting a degree of convergence on which of these, token islands need to speak to each other to make it easier for investors or brokers or custodians or anyone in the value chain to interoperate better, I think is the term I would use. So absolutely, and I think that's probably one of the biggest themes going into 2025. It's the end of a lot of the innovation experiments around the fringes, and now really trying to transform this and monetize it into production applications.
I think that's two really good points, Lawrence. One is that interoperability is key, and people the people that can really get to grips with that are going to succeed. And the other is, I think we heard this a lot today. I think people are pretty focused on what is going to really move the dial for them, that use case point, and I think where success is going to take place.
Well, I think you're right, and the most important thing about that level of innovation breaking through, and this is where we need innovation to carry on, and it's carrying on not just outside of the four walls of big institutions, as it has in fintech since you and I have known each other, but a lot of it's now going on inside the four walls of institutions and with their extended supply chains and partners. So I think the cap markets or the B2B fintech space has just probably blossomed in the past 5 or 6 years since you and I have been working in this space. But to your point, the volume and diversity across the planet, from New York to to London, Paris, Brussels, not many FIs in Brussels, Germany, Frankfurt, Middle East, right through to Asia. What we're not doing is particularly discriminating on what sort of innovations we're going to see come out of it. That's just flowing, and I think that's important because there are a lot of product categories or applications, particularly around either liquidity or collateralization, that many people won't see that are breaking through, which are hugely important to the greater efficiency of financial services and ultimately do benefit retail consumers. We're changing the plumbing. It's just a pretty boring topic most people aren't interested in, and boy, you wake up one day and then you start to see the benefits flowing right through to consumers. So I think that's the era that we're in, and those are the sort of things we're going to see over the next 36 to 60 months.
Yeah, I think it's a great point. Well, thank you, Lawrence, and thanks as ever to GDF for their fantastic support, and that we really value the partnership with you guys. And thanks everyone again for listening. We'll see you next time.